Hello, everyone, and welcome back to the Velocity channel, where we are your bridge to financial freedom. Today, we have a special request. We want to go ahead and show you how to pay off a $48,000 car loan at 9%. What is that? 5 years. That's 60 months. This person has to pay off their car loan, so about $1,000 is going into this car loan. But guess what? About $600 and something of that is going towards the interest, at least at first. And so what we want to do is we want to make sure that we level the playing field and make sure everyone is coming out on top. But before we do that, let's go ahead and like, share, and subscribe so that everyone can know the power of Velocity Banking. So let's get into it here. We have $48,000 at 5 years, that's 60 months, at 9%. How are we going to pay that off so that we're not taking up the whole 5 years and we're not giving all that interest towards the banks? Now listen, banks get a bad rap, right? We do need them. We do need their tools, but we don't need them that much, all right? Listen, we don't have to pay all that interest that they are saying that we need to pay, all right? Now, let's get it straight. This isn't a mortgage, this is a car loan. So most likely, the $600 something will actually go towards the principal instead of the interest. So that $360 will be going to interest instead of that $600 some that we were saying. Now, when you have a scenario like this, even though it's less toward interest, it's still hundreds of dollars out of your pocket. How are we going to pay this car loan in the most effective way? Boy, I'm glad you asked. Let's get into that. So we have the payments of about $997.40. That's each and every month, right? So each and every month, we're going to be paying this amount. But we also have, over here on this side, a Velocity account. What is a Velocity account? We're just going to go ahead and call it VA. A Velocity account is any account you use for maximum velocity of all of your obligations. So that's going to be your mortgage, your car loan, the student loans, whatever it is. Our focus right now on this video is getting rid of the interest payments as quick as possible. We are interest cancellation specialists, and that's what we want to do. But how do we do it? We're going to reach in. Start checking the savings, the IRA, if need be, if applicable, right? Make sure you don't get any penalties on there or any taxes, right? We're also going to reach inside of our line of credit, if that's applicable, all right? And reach in, and we're going to pull out this amount. $5,000. Now, with this $5,000, we're not just going to willy-nilly bake it into the monthly payment, right? We're going to do it at strategic places. And this is what I mean. When you're paying that $997.40 each month, it is, that principal balance is going down, but it's not going down by the amount that we need it to. All right. A lot of people, they worry about this number right here. Man, I want to refinance it to a 7%. I want to refinance it to a 6%, right? But when you really look at it, you'll realize, wait a minute, my concern and my priority should not be just at this interest rate. It should be at how long I'm paying it and what the balance is. So if I can take down that balance, I can take down the amount of time I pay this joker off. So this is why we take the $5,000 and slash, come on. Make the face too. Say slash, hashtag slash in the comments. The $48,000, and we turn that into $43,000. Now, keep in mind you're paying it down, so it's going to be less than the $43,000. But know that each time you take that check and write that $5,000 towards the principal, you are jumping into the future by months. Sometimes by years. It all depends on what the amount. And as you do that, guess what you're flying over? You're flying over all that interest that you would have been paying had you pay it like everyone else does. Had you pay it like the normal people do. Who wants to be normal out there? Isn't normal boring? Don't you want to be Velocity bankers instead? So let's do that. So as soon as we do that, guess what? We jump into the future. And we jump into the future by 20 months. Yeah, a year and 8 months, right? 12 plus 8, we had to do that in our head, all right? 20. 20 months into the future. And we are looking at, because remember, we're paying it, right? This represents 6 months of payments, $997.40 each and every month. We get to that 6 month of payments, we're already at the 20-month mark at month 7. Okay, so month 7 on your payment, because of that $5,000, you're already at the 20-month mark on your amortized schedule car loan. Now, as you continue to do this, you're continuing to pay the $997.40 a month, but all the while, this is being replenished. Because at first it was 0, right? Now it's back up to $5,000. Well, guess what? Let's say it takes you 7 months to replenish that. Let's say it takes you 8 months to replenish that $5,000. What are you going to do with the $5,000? Let it rot? What are you going to do with the $5,000? Let it swim in the swamp doing nothing? Staying stagnant? Right? Using alliteration here. Are you going to do that? Or are you going to deploy this soldier? Are you going to deploy these soldiers, all right, towards the balance again? And whatever the balance is down there by what month? What is it? 1, 2, 3, 4, 5, 6. Whatever month it is that you're at $29,610, right? So let's look at this number, $29,610. At this month right here, guess what you're going to do? This has already been replenished. You're going to do what? You're going to hammer the principal again. Do you see how time and balance are related and they can be your friends? When you understand how interest works, you earn it. If you don't understand interest, you pay it, right? So we're going to go ahead and take this $5,000 and hammer this principal right here. So what is that? Let's go ahead and do the quick math here. All right, 2, 4, 6, 10. And now, guess what we did? We jumped some months ahead again, so we're not going to have to pay that interest because we already paid. And again, and again, and again. We're going to do that again and again. So as you're continuing to pay the $997.40 each and every month, and this gets replenished, you'll just go ahead and tell them, principal, please, principal, please, principal, please, until it's all gone, and not at the end of 60 months, not at the end of 5 years, folks. No, we're talking about half or a little over half. So you get to save all of that interest and deploy that interest somewhere else. Deploy that interest to your future. You know, we have a system that does all this for you so you don't have to do the calculations. You say, CJ, that's a lot of money to freeze up for that. I know. We have a system that if you don't want to do that, our system's like, okay, you don't have to. We can pay it down like this because we know the date that you need to pay it and we know how much you need to pay it. We also know the account you need to pay it from. You got any questions on that? Don't hesitate. Let me know. Go to the link below in the description. We can talk to you. It's all good. See if you qualify. Man, it's awesome. The system that we have. And you already know that because you are persuaded not by a story. You're persuaded by the numbers. And this is what it's all about. God bless you. Like, share, and subscribe so more and more people can get off the streets and into houses, can get off the streets and into real estate, can get off the streets and into classrooms to teach everyone else about how powerful velocity banking is. God bless you all and good night.